The office property market 2014. A good start to the year. 2014 gets a head start. This year's first quarter is the best beginning of fiscal year since the 2008 crisis in the office property market sector. It is the continuation of 2013's growth. 1. Take-up. During the first quarter of 2013, 33,235 square metres of office have been rented. This is an increase of 22% over the same period in 2013. The number of transactions jumped from 59 in the first quarter of 2013 to 75 in the first quarter of 2014. That translates into an increase of 27%. The average size of transactions is 443 metres squared, which is slightly less than the previous year, minus 3.7%. The finance and banking sector represents 40% of the leased spaces, well ahead of the IT and telecommunications sector, 12%, and the automotive and transport, 12%. This is clearly due to the financial activity's importance in the Grand Duchy, which has seen the number of banks operating in Luxembourg increasing in 2013, with 9 net creations. 2. Vacancy rate. The vacancy rate remains low in the office sector. It has stabilised at 5.29%, corresponding to a 4.2% decline compared to the first quarter of 2013. With a continuous decline since 2009 and a peak reached at nearly 9%, it has been oscillating since last summer of around 5%, trying to find its balance point. More precisely, the vacancy rates of the main office districts of the City of Luxembourg are Kirchberg 2.01%, Central Business District 2.85%, Station District 4.03%, Cloche d'Or 4.02%. 3. Stock. The stock of office space this year will reach the 3.5 million metre square mark in the Grand Duchy of Luxembourg. 7,600 metres square were delivered during the first quarter of the year, out of an expected total of 134,000 metres square for the entire fiscal year 2014. 4. Rents. The low vacancy rate explains why rents in Luxembourg city centre reached as much as €540. This upward trend is expected to continue in 2014 due to the scarcity of properties in this district. Over the last 10 years, average city centre rents have risen from €312 to €480. In 2013, prime rents were €396 in Kirchberg, €312 in Cloche d'Or, €264 to €288 on the periphery. Interestingly, the Station District has become more expensive than Kirchberg, with prime rents reaching €420. 5. Investment market. The volume of investments undertaken during the first quarter of 2014 amounts to €288 million for 11 operations. This is a very important figure as it already represents more than 1/3 of the total investments recorded for the previous year. The year 2013 representing, in terms of investment, is the best year out of the last 6. The majority of services concerned by these investments are mostly concentrated in the Kirchberg area, 58% exactly, compared with the city centre, 27%. As the demand for downtown assets remains strong, the level of profitability continues to erode, standing at 5.2% versus 5.25% in 2013, despite rents sometimes.